John here with TRD Trader. So normally I would try to do halftime Wednesdays, but I'm still on PTO today, so I'm gonna go ahead and do halftime Tuesday instead of halftime Wednesday. Um, so let's. I like to do halftime Wednesdays or halftime Tuesdays. Take a mid part in the week and look at my portfolio and see if I can make any adjustments to my moves to make more money. And so let's go ahead and see two positions here. Dang, it's really starting to break out. Okay. So there's two things I want to do here. ASO stock, I can now, I sold puts on ASO stock a couple weeks ago, and it expired in the money, and I was forced to buy. Now, the reason that happened was because ASO had a bigger correction than I expected, but that being said, I still anticipated breaking out to about $42. If we go to, let's look at a 1 year chart. You'll see that when it IPO'd at $13, it's been on just a constant tear with minor corrections here, minor corrections, minor corrections, minor corrections, minor corrections. And then it hit this level of resistance at 41.71 and had a huge correction. And now it's beginning to go back up again. So analysts say that this should be they raised this. Okay. This used to be like 38 or something, or I think. But yeah, you can see analysts think that it should be a 44 or greater stock, and I personally agree with that. If you look at ASO, Academy Sports and Outdoors earnings per share, it's less than its competitor Dick's, and Dick's has like a stock price twice as much. So at the very least, if you were to bring up, if you were to bring ASO's EPS compared to what when it's comparable, it would bring the ASO stock price up from where we are to about 42, 43-ish, in that range, the mid to low 40s. And you can see all the analysts say it's a buy. And if you look at their financials, it's year-over-year growth, like almost exponential growth. Each one of their stores seems to be a money-printing machine. So yeah, there was a large correction, and I was forced to buy the stock, and I can either keep the stock now, and I calculated this. If I keep the stock I have now, I will get about a $300 profit when the stock goes to 42. However, if I sell my stock, not only will I realize the profit that I have now, but then if it does go to 42 and I sell puts, so let's go to this options. If I go ahead and sell puts at $42, I'm going to get $525 in premium. So on top of the $100 to $200 stock profit I have now, I can go ahead and sell my stock as is and get another $500 of premium instead of $300 if the stock breaks out to 42. So I'm going to go ahead and sell my stock to get that extra $200 of profit to help goose up my returns. And then another mid-month play. Let's go back to my positions here. You'll see that Fubo, which is a streaming service, they really broke out in just the last 2 days from where I set my put. So they were right at a good predicted floor, and then they bounced back up. And so now, even though I sold the put for 52 cents and I pocketed $52, I can buy myself out of my position, buy myself out of my obligation to buy their stock for now 9 cents on the put. So basically, I'm able to keep it was calculated to be a 1.9% return if the strike price wasn't acted on. So if you divide 52 cents by $27, that's a 1.9% return. If I buy myself out, I can keep 82%, well now 83%, just in the time of this video, it's jumped from 878 to 83. If I buy myself out of this put, I can keep 83% profit of the 1.9% profit, and then I can take this $2,700 I've got tied up, because remember, it's a cash covered put. I can't sell a put unless if I have the original asset to cover it, because I'm selling a derivative of an asset I own. So I can buy myself out of this obligation, free up $2,700, and then I can invest in by selling another put on another company that's more closer to its low. So this is how I, mid-market, if I find it I'm in a good position, I can go ahead and, free up my assets to make more investments. So Marathon is a cryptocurrency company. And you see here they have roughly let's see, about anywhere between like a 21 to 25 floor in this 1 year chart. So let's zoom in on 3 months. Three months doesn't quite tell it. 6 months. So yeah, 18 popped up, leveled, retraced a little bit, popped up, retraced, popped up, retraced, popped up, and then now let's go back to the 3 month. So I'm not 100% confident on Marathon yet. I was hoping it was going to break out a little bit, but I think crypto's been going down, so the crypto stocks have gotten hit. But the point is, I am going to invest in another put somewhere else. I haven't decided which one yet. Maybe Halliburton. Let's check out Halliburton. But the point is, mid-month, if you have this situation where you can buy yourself out of your investment for pennies on the dollar and keep most of your profit, you can free up money to do other midweek investments to goose up your return. So that's why I like to, even though you don't have to check on your investments more than once a week, you can literally, if I calculate the floors right, which I, based on past experience, I'd say I do that about 75% of the time. I get pretty good floors. You can set this and forget this, and you can get a 2 to 3% return. But if you do have the time midweek, you can revisit some of your plays and just buy yourself out of your position and try to get more profit. So just something to consider. All right, guys. That's all. That's going to be all for the moment. I'm going to go ahead and try and research which companies. Well, while you're here, let's try Halliburton. What is Halliburton at? Yeah, I might do Halliburton. I wasn't quite sure about Halliburton either, just because you see they have a large retracement. This could be a bounce back, and then the stock could plummet again. Because if you look at the 5 year, I was looking at the 1 year. Yeah, I wasn't quite sure about Halliburton, but I just might do Halliburton. Look at this. I didn't look at the 5 year, and yeah, the stock has been historically much higher. Let's go to max. Oh, it's extremely volatile. I didn't realize. Okay. That's interesting. If I did another 23, 3, 6, 9, 12, I would get 12%. Yeah, guys, I'm going to do a little bit more research, but I hope this video is a little bit informational for you. If you did learn something, and if you find this interesting, feel free to like and subscribe below, and thank you for your time. I hope you guys have a great day.